is a value stock, Charlie. 32 times? Come on. Even I'm thinking maybe that's a bargain. You know, it's only a $1.2 trillion company or whatever.
Nvidia is not a value stock. It is a wonderful company. The question about Nvidia is what is their economic moat like? Can people compete with them? In my opinion, that's the risk. That there are lots of other great semiconductor chip companies that can do a lot of what Nvidia can do, and that their economic moat is maybe not as wide as that valuation would imply. But no arguing with it. Been extremely well positioned. It was first a game chip company, and now it's very much evolved to be an AI chip company.
Well, a lot of people were trying to guess what you think the better value play is in the space. A lot of guesses around IBM. Reveal, drum roll, please. What's the reveal?
It's Oracle. So in fairness to me, we have been talking about this before people were excited about AI. And the reason Oracle is such a value name today is because if you think about what AI is about mining data. Computers are not thinking now. They're not going to be thinking anytime soon. What companies are going to do with AI is they are going to analyze data. And the #1 data software company in the world is Oracle. Major companies around the world have all of their data on Oracle software, and it's very hard actually to shift to anybody else. And so now AI is going to give Oracle an opportunity to analyze that data in ways that they haven't before. And you can get this name. Now, it was a real value stock 2 years ago, trading around 13 times. It's still less than 20. I'd say maybe 18 times earnings. So you're getting a real play on using data better at a very reasonable multiple.
When, and this always kind of gets into, you know, the interesting question, when would you be a seller of it? I mean, are we getting close? Because once we hit 20, I think, I don't know if that's, you know, your kind of thing.
Yeah, it's funny. That is kind of the magic number here at Ariel. We calculate two things. We calculate an intrinsic value for the company, and then we calculate a forward price earnings multiple. And 20 has historically been a number that we get squeamish on, and we start to trim positions. So I would say that at 20, this will go from being one of my largest positions to a smaller position. But I do think this is an extremely well-positioned company that can justify a 20 multiple.
What are some other names in the 13s right now, so to speak, that you like?
So a number of auto-related names. Borg-Warner is, after completing its spinoff, is the #1 producer of powertrains for electric vehicles. And you would think that kind of electric vehicle position as the #1 company in that space would justify a multiple in the high teens or 20. It's not. It's trading below 10 times earnings. PHINIA, which is the internal combustion spinoff from Borg-Warner, is trading also at about 10, 11 times earnings. So people are nervous about auto. We think actually there's going to be good rebounding demand for auto, and Borg-Warner and PHINIA are well positioned in that space.
You know, not to overly dwell on this, but it's felt to me for 2 years like we're at the end of this auto cycle, which we're clearly not. But you look at it and you say, well, how much higher can prices go? How much more saturated can the market get? Didn't everyone buy a car the last couple of years? New used car prices are all coming down. Teslas are 35% cheaper than they once were. I mean, that's why I guess you could say, okay, the servicing market or something, you know, will stay strong. But it seems to me like the sort of the core of it is an old story.
Yeah, but it was a really dead story 2 years ago. There were no cars on the lot. You couldn't buy a new car if you wanted one. And so we do still think there is pent-up demand. You mentioned the big bear case, which is that cars have gotten very expensive and that many buyers are struggling to make their monthly payments. But there is, in our opinion, still significant demand for new cars. The price difference between new cars and used cars is very small. And so we do think there's still pent-up demand for cars, particularly in the U.S.
Super interesting. That still has legs. You like the energy trade. Sphere is up 73% year to date. All right, we got to have you back when something's not going your way, Charlie.
Sphere is, I got to warn people, be careful here about Sphere. It's gone up a lot. And so I'm not pounding the table the way I have with you in the past.
All right, very good. Charlie Bobrinskoy, thanks for your time today.
Thanks.